Welcome to Fed Day. It's May 7th. Scott Riley, the market update desk, NMLS number 157524. Well, of course, everybody knows that we've got the Fed decision today. Let's go through some of the things that are happening. One of the things that broke late last night, early this morning, is China is set to meet with Secretary of Treasury Bessent this weekend. So that's the first scheduled talks since the imposition of the tariffs. That is a positive, at least, track to show that we're actually starting to get some conversations going. Now we've got yesterday, we had a very positive, once again, I should say, 10-year Treasury auction. We saw an increase again of foreign investors and institutional domestic investors. So both those came very strong. In fact, a little stronger than expected. This is the second or third auction in a row that we've had positive impact on the auction. And there was concern with the tariffs and maybe international pullback of our bond market. Would it be hit with the tariff information that's out there and geopolitical? It wasn't. We're showing increased investment into our treasury market. Now, also interesting, we saw the Fed through their reinvestment arm. They bought about 15 billion of 10-year notes. That's the second auction in a row that they had significant investment into the auction. Once again, very positive things. Now, we've talked about recession indicators, what's going on. One of the big indicators out there is called the poly market traders. They're factoring in about a 57% opportunity for a domestic recession. So that's been creeping up the last few reports of that, and that's the poly market traders. Mortgage applications last week, purchase applications, yes, purchase applications were up 11%. In fact, we're up 13% year over year. Regardless of what the media is saying out there, it's a very strong market, and even more so, as we've talked about, in West Michigan. Mortgage-backed securities, they're testing a very important 25-day moving average, and then up above that are a couple different tough sledding headwinds in front of us, the 50 and 100-day. The 10-year Treasury, we got an improvement about 1-2 basis points so far today. We also we're smack dab in the middle of resistance of a Fibonacci level and a 25 and a 50-day moving average. We've got some room to benefit if we can get some decent commentary from the Fed. If they're not too hawkish, we've got some opportunity to get better in mortgage-backed securities and get the yield down in 10-year treasuries. Those both add it to better mortgage rates. So we're watching things very closely. As I said, the big thing today is going to be the commentary, not the decision from the Fed. The decision is going to be a pause. But how is Chairman Powell going to come out in the Q&A? What's he going to say? Is he going to go off script? He usually does not. He's very tight on his script. And the verbiage is going to be very, very important. The traders are going to dissect the verbiage for any indicators of future movement. Now, as unemployment potentially starts to go up, we're at 4.2% right now. As we get to if we get to 4.3, which we probably will, and if we get to 4.4, they are going to be pressured on the employment side of their mandate to start to look at lower rates. So we'll keep you up to date. We'll do probably an update later this afternoon once the decision is out from the Fed and maybe a quick breakdown of the comments. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Take care. Have a great afternoon.